You were listening to ChartingWealth.com for Thursday, the 7th of January, 2016. We jump right into the market. It's been a down day. We always start with IYY. I had a question from a viewer, listener, yesterday about why we use IYY instead of DIA, the Dow Jones average. Well, I want to see what's going on in the total market. And what's been going on in the total market? Well, it was down for the day on Wednesday, the 6th, 2.21%. Continued its down move. We now have 3 red down candles. We could actually, and I'm going to redraw right now. This is how great this software is. Again, we're using just freestockcharts.com. And of course, TC2000 is even better from the Warden Brothers. Great piece of software. It is that easy to draw a trend line. We have a connected trend line connecting 2 candles. We prefer 3. For those of you listening by audio, all I did was draw a trend line for the last 2 two-day candles on the 5th. That was the 4th and 5th, and on the 6th, we've just started drawing that 2-day candle. And of course, we have strong down moves in the market on that 4-day. Well, it's really 3-day. We've not closed out that second candle yet. We had a crossover going down on our MACD moving average convergence divergence back on the 2nd or so of December, and continued strong down moves. The market, we're going to drop over, and I'll explain to you what we're seeing on our short chart, our shorter chart, the 4-hour or half day. What we saw happen was big strong down moves as the markets opened at the beginning of the week after the New Year holiday. Big down moves in the morning on the 4th of January. A little bit of uptick in the afternoon, slid sideways on Tuesday, and then down moves strong in the morning, and then a little bit of an uptick in the afternoon to close down 1.21%. So what do we have going on? Well, we have down moves on the 2-day chart and down moves on the shorter chart. So we are in a confirmed down move on the total market. Now, let's drop over and see what's going on SPY. Seeing somewhat similar. Again, market rolled over going down around the 2nd of December, moved down strongly till the 14th, ticked up a little bit, dropped back down around the 22nd of December, moved up toward the end of the year, and then on the 31st started moving down and continued to do so as the new week opened in the new year. So we have confirmed down moves. If we look at what happened during intraday on the 4-hour chart, see the same kind of things happening. Market slid sideways on the 5th and then dropped over on the 6th. That is where we've ended the day. Don't see any trading possibilities if you did not get in on that down move back on the morning or the afternoon of the 31st of December. And of course, that big jolt down in the morning on Monday, the 4th. No ability to jump in since then. Market did slide sideways, but as far as the charts we're using, and again, remember, we are not a stock calling service. We're an education firm. We're talking about you getting in, practicing doing virtual trades. If you've not checked out our website, please be sure to do that at chartingwealth.com. A lot of good information there. Sign up for our daily newsletter, and which is basically this podcast. And we hope you find it helpful every day. We're going to drop over now to our Qs. What is the Qs? Well, the SPY, of course, was Standard & Poor's 500. The Qs is the NASDAQ 100. What are these for newbies? These are indexes, baskets of stocks that reflect IYY, the total market. S&P 500, of course, is 500 big companies, lots of volume. And the Qs is the technology end of the market. That is the tech stocks. What have they done? Well, they've dropped off also, down technically 0.96% for the day. Standard & Poor's was down 1.26. So right at, on the technology stocks, down right at 1%. Now that again is 3 candles in a down move. Again, showing you how easy it is to establish trend lines with this great piece of software. And this is just the free version. Imagine how wonderful the TC2000 is. What do you see happening? We got down moves in the market. Now, if we go back and look at intraday, what do we see? Well, we have a 2-day trend line. We are well below that. Had a crossover going down back on the 31st, and we've continued to see solid down movements, but for a little bit of a sideways side on Tuesday. So the markets, all of our indexes, all three, are in confirmed strong down moves on both the short charts and the long. That is the IYY, the total market, the S&P 500, and the QQQ, which is the NASDAQ 100. Lastly, what do we have to go to? Gold. What do we see happening with gold? Bold, strong up moves. It's about time. 2-day chart crossed over back on the 14th. If you were waiting after that move to see some positive movement, you had to wait a while and panic when gold dropped off. Actually, the low was below where we had sort of charted gold at stopping at $100 and about 40 cents. Then it perked back up on, that low was on the 18th of December, perked back up on the 22nd, rolled back over again toward the end of the year, and then started off with a bang on Monday. Two big 2-day candles. Gold was up 1.44% for the day. If we roll back and look at our 4-hour intraday chart, what do we see happening? Well, gold crossed over going up on the 2-day chart. We talked about this. Remember, if you were listening to the program yesterday, we said, hey, when you see the MACD and you see the derivative oscillator roll over at the same time, that's usually a very good sign for movement in whichever direction they're going, either up or down. That is exactly what we saw when gold rolled over on the 29th of December. It moved down, and of course, when it rolled back over on the 4th, it has moved up substantially. We're starting to like our 4-hour chart again. Again, it's not proved itself. It was so good for us for quite a while when you look back at how wonderful it was at these good, strong moves. Well, gold has moved strong again. Remember, those of you who've studied our teachings, you know, if you've just read about the MACD, the moving average convergence divergence, is not a good indicator when you have a sideways slipping market, but gold has started to really move again, so it's starting to work now. Hopefully it will continue to do so. Folks, that is where we are at the end of the day with the markets. If you've not already signed up for our newsletter, please do so. We'll send you this every day. Thank you so much for following us on Facebook, Twitter, iTunes, Instagram, YouTube. We appreciate you and we love to hear from you. God bless. Please let us hear from you. Sign up. We'll do everything we can to be here every day to help you in every way. Take care. God bless from chartingwealth.com.